There is a room somewhere in Washington, D.C. where decisions happen, not decisions about legislation, not decisions about politics, decisions about war, about borders, about threats that most people will never hear about. And increasingly, those decisions are being made not just by humans, but by artificial intelligence. The question is, which AI system is sitting in that room? Which company built the software that the CIA uses, that the Air Force uses, that border security uses, that national defense intelligence relies on right now today in real operations? It is not OpenAI. It is not Google. It is not Microsoft. It's a company most retail investors have never heard of. It trades on the New York Stock Exchange. It's currently priced below $5. And it just told the world it's in the strongest financial position in its entire history. That company is BigBear.ai, ticker symbol BBAI, and this is the story Wall Street hasn't finished telling yet. Let's get one thing straight before we go deeper. The AI revolution has two phases. Most investors are only aware of one phase. One is what you've already lived through. The chatbot era, the language model race, OpenAI, Anthropic, Google Gemini. Everyone competing to build the smartest AI assistant that answers your questions, writes your emails, and generates your images. That phase captured the public imagination. It drove Nvidia to historic heights. It turned AI into a household term. But phase 2 is quieter and far more consequential. Phase 2 isn't about chatbots. It's about deployment. It's about taking AI off the cloud and putting it inside the most critical, most secure, most high-stakes environments on Earth: military operations, intelligence agencies, national security infrastructure, environments where you can't just log into ChatGPT, where data sovereignty is law, where the AI needs to run in classified settings, follow strict compliance frameworks, and be trusted with information that could affect lives. That's a completely different problem, and most of the AI giants can't solve it. The companies that can solve it, they look very different from the ones dominating your newsfeed. They're smaller, more specialized. They've spent years building the relationships and the clearances, and the infrastructure to operate at the intersection of artificial intelligence and national defense. And right now, one of those companies is sitting quietly, largely ignored by retail investors while the contracts pile up. The backlog grows, and the story slowly builds toward what could be a significant inflection point. Here's where things start to get interesting. In the past 12 months, while most investors were chasing Nvidia higher and higher, BigBear.ai was doing something. Almost no one noticed. It cleaned up its balance sheet completely. It cut its long-term debt by more than 90%. It raised over $690 million through capital markets activity. It built a cash and liquidity position of more than $460 million. For a company with a market cap in the low hundreds of millions, that is an extraordinary financial transformation. Then it went shopping, and this is where the story changes. In January of 2026, BigBear.ai completed a $250 million acquisition of a company called AskSage. Now you might not have heard of AskSage. Most people haven't. But inside the US government, AskSage is everywhere. AskSage is a generative AI platform built specifically for defense, intelligence, and highly regulated environments. It runs inside secure classified networks. It doesn't just give you an AI chatbot. It gives government teams AI that complies with the strictest security and data sovereignty requirements in existence. Before the acquisition, AskSage already had over 100,000 active users across 16,000 government teams and hundreds of commercial organizations. Think about what that means. Before BigBear.ai even closes this deal, 100,000 people inside the US government are already using this technology. Every single day, most investors are still missing what that number actually implies. So let's break down exactly what BigBear.ai does, because this is not a company that's easy to categorize. And that's part of why it gets overlooked. BigBear.ai is what the industry calls a decision intelligence company. That's a technical term for a very human concept, helping people in high-pressure environments make better decisions faster, using data and artificial intelligence. Think about the problems facing a national security analyst. They're looking at thousands of data points, satellite imagery, communications intercepts, logistics data, behavioral patterns. The human brain can only process so much before it gets overwhelmed. BigBear.ai builds AI systems that cut through that noise. They don't just report the data, they identify patterns, flag anomalies, recommend actions, and explain why. The company has three main areas of focus. National security, meaning defense agencies, military operations, intelligence community customers, trade and travel meaning border security, cargo inspection, global supply chain monitoring. And now, with the AskSage acquisition, a growing generative AI platform that brings large language model capabilities into secure government environments for the first time at scale. The CEO is Kevin McLean. You might recognize that name. He was the former acting Secretary of Homeland Security under President Trump. He came back to lead this company through exactly this kind of transformation, a combination of government credibility, operational experience, and AI ambition that is very difficult to replicate. The company's headquarters is in McLean, Virginia, right in the heart of the intelligence community corridor. That's not a coincidence. Now let's build the bull case, because the numbers are more compelling than the stock price suggests. Start with the backlog. As of Q1 2026, BigBear.ai reported a contract backlog of $282 million, up 14% from the prior quarter. That's deferred revenue. That's work that is already contracted and waiting to be delivered. For a company guiding to between $135 and $165 million in full-year revenue, a $282 million backlog means visibility well beyond the current year. The revenue is already there. It just hasn't been recognized yet. Now add the specific contracts. In Q1 alone, the company announced more than $60 million in new national security contract wins. That included a classified sole source award from the U.S. intelligence community worth $53 million. Sole source, meaning they were the only company in the world selected for that contract. No competition, no bidding war. Just, we need BigBear.ai, and nobody else will do. Then there's the larger opportunity sitting on the horizon. The company has positioned itself for a potential contract vehicle with the U.S. Air Force valued at up to $900 million. That one contract alone could be transformative. Factor in the AskSage business. The platform brings $25 million in annual recurring revenue and 100,000 plus users out of the gate. ARR in the government AI space is a very different animal than consumer software. These are multi-year contracts, mission-critical deployments, and extremely sticky customer relationships. Government agencies don't rip out their AI infrastructure because a competitor launches a new version. The switching costs are enormous, and then there's the margin story. Before AskSage, BigBear.ai's gross margins were in the low 20% range, typical for a services-heavy government contractor. In Q1 2026 post-acquisition, gross margin expanded to 34%. That is a massive jump. It signals a fundamental shift in what kind of company BigBear.ai is becoming, moving from labor-intensive contract work toward higher margin software platform revenue. Over time, that shift could completely reshape the financial profile. Wall Street analysts who follow the stock have price targets ranging from roughly 5 to over 6 per share. At current prices, that implies upside of 40% or more. The consensus is not bearish. The consensus is that the stock is simply mispriced right now. So why is the stock still so cheap? Why is one of the most embedded AI companies in the US government trading at a fraction of what the broader AI market commands? 3 reasons, and each one is worth examining carefully. First, the revenue narrative. BigBear.ai had a difficult 2025 revenues, declined year over year to about $127 million. That headline number scared off a lot of momentum-focused investors. What they missed is why revenues declined. It wasn't because the business was losing customers. It was because government contract timing is inherently lumpy. Large contracts get delayed by procurement cycles, budget approvals, political transitions. That's the nature of the business, not a sign of fundamental weakness. The 2026 guidance of $135 to $165 million represents a return to growth, with the backlog and new contract wins providing the evidence. Second, the dilution overhang. To fund the AskSage acquisition and restructure the balance sheet, BigBear.ai issued a significant number of new shares. The authorized share count nearly doubled. That's a real concern for existing shareholders, and it's one of the reasons the stock has underperformed year to date. But here's the flip side: the company now has zero long-term debt and hundreds of millions in liquidity. It has the balance sheet to execute. The dilution was painful. The resulting financial strength is real. Third, the perception gap. BigBear.ai doesn't show up on the trending tickers. It doesn't get the viral Reddit posts. It doesn't have the name recognition of Palantir or the consumer buzz of SoundHound. It operates in classified environments, doing work it literally cannot always talk about publicly. That invisibility creates a perception gap, and perception gaps create Mispricing, the market is pricing. BigBear.ai like a struggling government contractor. The fundamentals increasingly look like a defense AI software platform with sticky recurring revenue, expanding margins, and a growing backlog. Those are two very different stories. And eventually the market tends to notice the difference. Now let's be honest about the risks, because this is not a sure thing. And any investor who tells you otherwise is selling something. The most important risk is revenue. Concentration. A large portion of BigBear.ai's revenue comes from a relatively small number of government customers. If a major contract is delayed, cancelled, or redirected to a competitor, the revenue impact is immediate and significant. Government procurement is notoriously unpredictable. Budget cycles, political shifts, changing agency priorities can all disrupt the pipeline regardless of how good the technology is. The dilution risk is real and ongoing. Management has proposed increasing the authorized share count further. With a shareholder vote on record, more equity issuance could be ahead. That means existing shareholders could see further dilution as the company funds growth and potential future acquisitions. Competition is fierce. Palantir is the dominant force in defense AI, and it has far deeper relationships, far more capital, and far more brand recognition with institutional investors. Booz Allen Hamilton is also deeply embedded in the same agencies. BigBear.ai is not fighting in an empty market. It's fighting upstream against well-resourced, well-connected incumbents. The profitability timeline is unclear. Despite improving gross margins, the company is still posting substantial net losses. Turning gross margin improvement into actual operating leverage and eventually GAAP profitability is an execution challenge that management has not yet solved, and the macro environment matters. Government AI spending is growing, but it's not immune to budget pressures. Federal spending debates, continuing resolutions, debt ceiling dynamics, all of these can create headwinds for contract awards. Eyes open. This is a speculative, high-conviction play. Position sizing matters. Let's come back to that room in Washington, the room where decisions are made, where data becomes intelligence, and intelligence becomes action. The AI revolution didn't start with consumer chatbots. The real revolution started earlier, in secure government networks, in classified facilities, in the kind of environments where most technology companies will never be allowed to operate. BigBear.ai has been building in those environments for years, quietly, methodically, with the kind of credibility that takes a decade to earn. Now, the company has a clean balance sheet, a growing backlog, a $250 million platform acquisition, already embedded with 100,000 government users, expanding margins, and a CEO who used to run Homeland Security, and the stock is still trading under $5. Maybe the skeptics are right. Maybe government contract volatility will keep suppressing the story. Maybe the dilution has permanently damaged the shareholder base. Maybe Palantir wins everything and BigBear.ai stays in the shadows forever. Or maybe this is what early looks like. Before the contracts compound, before the AskSage platform scales across every agency that touches national security, before the Air Force deal, before the margin story reaches its conclusion. Maybe this is the kind of stock where the people who did the research early while everyone else was distracted by the big names end up being the ones who look back and say, "We saw it before Wall Street did." BigBear.ai, ticker BBAI, the AI that already runs in places you'll never see.